Hey everyone, it's Justin here, America's Honest Tax Accountant from Number Crunch Nerds. In this video, we're going to be calculating the number 1, state income taxes, number 2, real property taxes, and number 3, personal property taxes that you can deduct on your federal 1040 using the all-new SALT deduction estimator and calculator that is now included as part of the personal tax planning template program. All right, so we're in the personal tax planning template. I'm on the main tab. Let's look at this row right here, the SALT deduction. As most of you know, that is capped at $40,000 for 2025 through 2029. That is one of the new OBA provisions passed into law this past July. And then the cap on state and local tax deductions will revert back to $10,000 starting in 2030 unless the law is extended or changed. So the question I have for you regarding this line, let's just take this $8,700 right here for 2025. Where does this number come from? Now, if we click on this cell, which I have done, and we look at the source, it's coming from the $40,000 SALT deduction tab. In this particular case, cell F22. So let's go over to the $40,000 SALT deduction tab. There is cell F22 right here. And as you may recall from previous training videos on this tab, this section right here is comparing the actual state and local taxes that you paid for the year against the maximum deduction that you are allowed after phase out. In this particular case, there is no phase out. And so the actual deduction equals the amount of state and local taxes that you paid, in this case, $8,700 for 2025. And so that brings up the real question of this video, and it is, where does this number right here come from? Because as you can see by the green color coding on this tab, this is one of the data entry fields where you have to enter in the amount of actual state and local taxes that you paid. And so there may be a lot of numbers underlying this total right here. And that is where our new tab right here is going to come into play. This is the SALT taxes entry. And this tab, which we're going to walk through right now, will be used to figure out what your SALT deduction is for any particular year. Okay, now on this tab, you're going to see two methods for figuring out what your SALT deduction is. Method 1 right here, we're going to call the high level estimate. And then if I scroll down a little bit, method 2 right here is going to be the detailed calculation. Now you will be able to use either one of these methods on a year-by-year basis. It doesn't have to be the same method for each year. We're going to walk through both methods right now, but I want to start with method number 2, the detailed calculation, because this one will lay out all of the components which are actually deductible for state and local tax purposes in any particular year. So looking right down here at 2025, let's make sure we understand what state and local taxes are deductible in 2025. And the answer is going to be any taxes that you actually paid in 2025. The key to understanding is that it doesn't matter which year the taxes that you paid are actually for. What matters is which year you paid them in. For example, if you made a tax payment for 2024, but you made it in 2025, that would still count as being paid in 2025. The fact that the payment applies to 2024 doesn't matter for this purpose. On a similar note, let's say that you made a tax payment that was for 2025, but you made it in 2026. In which year would you be able to deduct that tax payment? And the answer is 2026, because that's the year when you actually made the payment. The fact that the payment relates to 2025 doesn't matter for that purpose. Okay, so let's run through the categories. The first one is we have state and local taxes withheld for the current year that you're working on. The most common example would be like withholding on your W-2, but you could also have withholding on various kinds of 1099s, for example. And so let's go ahead and populate this section. I'm going to enter a number into these 3 cells. Okay, so coming back right here, this would be the W-2 for spouse 1. on, you would add up all of the state and local tax withholding that was on there, and you would enter it into this cell. Same concept right here if spouse number 2 is employed. And then just to make the example complete, let's say that we have some sort of 1099 that we have received, and there was withholding on it for 2025 of $600. And so the subtotal of withholding for this section of the calculator is going to be $5,986. One quick thing to note here about 1099s, if you run a business or you have a Schedule C or a Schedule E, that's a rental property in most cases, if you are already deducting this state tax payment on one of your business returns or your business schedules, then you would not include it here. This is only the stuff that you are not deducting on any kind of business return like a Schedule C or a Schedule E. And again, the last thing to note is that this is withholding for the current year. So for 2025, the W-2, the withholding on that W-2 will be for 2025, and therefore it was paid in 2025, and therefore it would be a deductible item in 2025. Now, in the next section right here, we have state and local taxes paid in the current year for a prior year. For example, paid in 2025, but they were applicable to 2024. Okay, so the first item could be a Q4 estimated tax payment made for the prior year. And again, we are assuming that it was made in the current year. So let's do an example. Let's say that your state follows the federal schedule for when estimates are due. In that case, the Q4 estimated state tax payment would be due on January 15th of the subsequent year. So if you're making a Q4 2024 estimated state tax payment and you make it in 2025, again, assuming it's made in the current year, you make the payment in 2025 by, let's say, January 15th, then that payment was made in 2025. The fact that it relates to 2024 doesn't matter, and so that would be a 2025 deductible item. For this example, I'm just going to throw in a $2,000 Q4 estimated state tax payment. Now, the next possible item could be the payment that you make with your state tax return on April 15th. Again, this is assuming that your state follows the federal deadline and that the filing date for your return is going to be April the 15th, or it could be October the 15th if your state allows a 6-month extension, just like federal does. But more generally, regardless of whether it is April 15th or October 15th, as long as you make the state tax payment in 2025, it doesn't matter that you're actually paying the tax on the 2024 tax return, for example. You're still making the physical payment in 2025, and therefore that would be a deductible item. For this example, I'm just going to throw in a $1,200 payment, and again, that would be the tax that I paid with the filing of my state tax return. Now, right here on the next line, I have the exact same item as we just saw on the previous line right here. This one down here, I'm just saying is for state number 2 if you happen to pay state taxes in more than one state, or this could also be used for a local jurisdiction if you pay taxes there. For purposes of this example, let's just assume that the taxpayer only pays in one state, and therefore this would just be 0 right here. The next item is going to be a refund from the prior year's tax return that you applied to the current year. So for example, let's walk through the process. You file your state tax return. Let's assume it's due on April the 15th and you paid in $1,200. You also happen to have a Q4 estimated tax payment made for that same state. So this is a grand total of $3,200. And then a few weeks later, after the state tax return has been processed, it turns out that you're due a $450 refund, but you have chosen on your tax return to apply any refund to the next year. So you would apply it to 2025 in this example. So you can kind of think of the process of you got a refund of $450 in your hand, except you just chose to pay it back in for next year. And so if you collapse that process into just one step, basically you applied the refund instead of actually receiving it in your hand and then paying it back in. And if you look at it from that perspective, then you have basically paid in another $450 in 2025. The payment was made in 2025. And so I'm going to put $450 right there as a deductible item. And then the last row that we're going to have in this section right here is a back taxes placeholder. This could be for random amounts that you might happen to owe for earlier years. You cannot include interest and penalties if applicable in this row. But if you do have to pay some tax for a prior year and you actually make the payment in the current year, in this example 2025, then that would be a deductible item right here. In this example, let's just assume that doesn't apply. And so the subtotal for this section is going to be $3,650. All right, and then the last category for this section is going to be state and local taxes that you paid in the current year for the current year. For example, you paid them in 2025 and they are for 2025. The most common example of those would be your Q1 through Q3 estimated state tax payments. Again, we are assuming that your state follows the federal schedule for when estimated tax payments are due. However, even if your state does not follow that schedule exactly, you can just substitute these descriptions for whenever the estimates for your state are due. And as long as that is in the current year, for example, right now we're working on 2025, so the payments would be made in 2025, then those estimates would go right here as deductible items. Let's just assume for this example that you did not make a Q1 estimated state tax payment, you did not make a payment in Q2, but you did make a payment in Q3 for estimated state taxes, and the amount of that was $1,500. And therefore the subtotal for this section right here is going to be $1,500. And then finally, right down here in this row, the grand total for the state and local income taxes that you actually paid in the current year, 2025 in this example, is going to be the sum of this subtotal right here plus this one right here plus this one right here for a grand total of $11,136. Okay, now if we scroll down to the next section of the detailed calculation, we're going to find real property tax. Now, for federal purposes, you can deduct real property tax paid on your primary residence would be the most common example. You can also deduct real property taxes paid on a second residence or a vacation home or other kinds of real property. Similar to what I said before, this is going to relate to taxes paid on real property that is used for personal purposes. In other words, this is not real property tax paid on property that is used in a business. So for example, if you have real property on a Schedule E, which would be like a rental property, or you had real property used in a trader business, that would be like a Schedule C, the real property taxes paid on those would be deducted on those business tax returns. Only tax paid for personal use property would go here. Let's assume for this example that you live in a state that does assess real property tax, and for your primary residence, I'm going to throw in $6,725 as the amount that you actually paid in 2025. Once again, it does not matter if you're paying for 2024 or maybe you're paying in advance for 2026. The year that the money is for doesn't matter. What matters is the year that you pay it in. And so we will assume that this is what you actually paid in 2025. For purposes of this example, let's just assume that secondary residence, vacation home, and other real property doesn't apply, so those will all just be zero. And therefore the grand total for this section is going to be $6,725. And then finally, right down here in the next section under personal property tax, the most common example of what goes here is going to be the portion of your registration fees on various types of vehicles that constitutes a tax. So for example, when you go to the DMV to renew your registration, there's a fee that you pay. Part of that fee is a tax. Not all of it's a tax, but part of it is a tax. And it's that tax that you are paying on personal property that is deductible in this section. So again, the most common examples will be your primary and secondary vehicle. If you have more than 2 vehicles, you can deduct the personal property tax on all of them. If you have recreational vehicles or motor motorcycles or boats or any kind of vehicle where you pay a registration fee and part of that fee is a tax, all of that tax can be deducted down here. So let's just assume for this example, on our registration statement for the payment that we actually made to register this vehicle in 2025, there was $675 of tax. We will assume $386 of tax paid on the registration of vehicle number 2. Once again, note that it doesn't matter what years these are for. For example, this could be a registration statement for 2 years. Like, let's say you were renewing the registration for 2025 and 2026, so this is tax on all of that, but it's still all deductible in 2025 because you actually made the payment in 2025. The portion that was for 2026 gets deducted in 2025 because that's when it was paid, and therefore in this example there would probably be 0 deducted in 2026, because if you had a 2-year registration, chances are you're not going to renew again until 2027. Okay, so for purposes of this section, we will assume that's all that applies. We don't have any recreational vehicles, and so the grand total is $1,061. And then when we go down here to the final grand total of all the state and local taxes paid in the current year, we're going to add together this item, which is all of the state and local income taxes. Then we're going to add in this item, which is all of the real property taxes. And then we're going to add this item, which is all of the personal property taxes, for a grand total in this example of $18,922. Right, now scrolling back up here to the top of the tab and looking at this section right here. On this row, we're going to have our method selection toggle switch where we can choose either method 2, which is the one that we just went through, or we can choose method 1, which is going to be this high-level estimate right here. I have just uploaded to the members area for the personal tax planning template program the follow-up video which goes over how to employ method number 1 for purposes of calculating our state and local tax deduction. I have also uploaded to the members area the video showing you how to link up our all-new state and local tax deduction calculator to the main tab of the personal tax planning template. So if you're already a member of the personal tax planning template program, you can log in at your convenience and check those videos out. Now, continuing with what we have done in this video, we are going to choose method number 2, which is what we went through below. So I'm simply going to go into this toggle switch and change it to M2, and you can see that the result right here for 2025 changes to our $18,922, which if I scroll all the way back down to the bottom of the method 2 section right here, there is our $18,922 grand total. Okay, so what happens now with this $18,922? This is the grand total of all of our state income taxes, real property taxes, personal property taxes, all paid in 2025. Where does this number right here go? Well, it's going to be linked right back here to the $40,000 SALT deduction limitation tab. Right here is the grand total $18,922, which we determined in the detailed calculation earlier in the video. In this particular example for how the personal tax planning template is set up for 2025, there is no deduction phase out, so we would be allowed the full $40,000 of state and local taxes. However, we are obviously limited to only the amount paid. You can't deduct more than you actually paid. So this $18,922 carries down here to the actual deduction. And then when we come back over here to the main tab of the personal tax planning template, there's our $18,922 of state and local tax deduction. And that process that we just went through in this video is how we will determine how much of our state and local taxes is eligible for deduction using the method 2 detailed calculation that can be found in our all-new tab for calculating the state and local income tax deduction for federal purposes. By the way, if you are new to the personal tax planning template and video training program and are ready to get your lifetime tax plan, including your Roth IRA conversion and estimated taxes planning, laid out before the December 31st, 2025 deadline, my 2025 year-end fast-track training program is going full speed ahead inside the members area. Everyone who joins today will gain lifetime access to the personal tax planning template, the 2025 fast track training, as well as all future trainings related to the program as they come out in 2026 and beyond. Lifetime access to the personal tax planning template program for a one-time access fee can be found using the link in the description below this video on YouTube. And if you're new to the channel and would like to learn more about the personal tax planning template and see it in action, then check out some of my top-rated individual income tax YouTube training videos that you can find in the links in the description below this video, or by simply searching on YouTube for Number Crunch Nerds Individual Income Tax Training. So that's going to be it for today's video. Thanks everybody for watching, and I'll see you next time.